I'm just having a look at the few weekly, daily charts of interest. So on the S&P 500, we've got this broke the 100-day moving average as I was hoping for, and now we should have a fair shot to the downside. The weekly candle just found support at the top of the Kumo here, but I don't expect that to be a major support there. It's interesting to see something like that. And the weekly MACD's crossed down now, so we should be off to the races hopefully. And the VIX is up now. The MACD's been still crossed up, and the daily's now having a shot at taking another second leg up. So the second leg could see it up to the could potentially see it up to make a new high here around the 24ish or 23, 24. That's what I'd like to see anyway. Around the that's the initial target anyway. But, the junk bonds are just sitting on the 100-day MA here, and nice looking weekly for the downside here. So should get this kicking off to the downside. Big volume there on that selling candle, that red candle there. So the junk bonds are a good indication of where stocks are going to go as well. Nasdaq has cleared the 100-day MA to the downside as well, so the weekly chart's looking good. Still got plenty, should have plenty of downside left in this yet, and maybe it won't go down in a straight line. It very rarely does, but the momentum's still good. Not so much volume here on the Nasdaq, but still good though. Transports made a big, Nasdaq Transports made a big double top here on the weekly and turned down again. It's now back below the Kijnsen, so this is a massive distribution here, so a target to the downside here, and transports are a very good economic indicator. So when the transports are weak, that's as the economy is really slowing a lot, and it's also good to trade too, transports. Russell 2000, Russell is down, just sitting on this little support here, but it's below the 100, and the weekly's also crossed down, and weekly MACD, so it's below the weekly Kumo, so things are looking pretty good on the Russell too, which I also trade. I don't talk about this as much, but I also trade this quite a lot with options, obviously. DAX is good, another good one. DAX has cleared this little support here. It's heading down to the 100, and the weekly's not turning over on the DAX yet, but not crossed. It's turning over, but it's not crossed yet. But the daily MACD's just gone below the centre line, so we should be having another good downside on the DAX here, hopefully. That's a nice target down. If it got down here, that'd be awesome. But initial targets to the Kijnsen, of course. And first we've got to clear the 100-day MA, which shouldn't be a problem. But the main target's down to the weekly Kijnsen, but shouldn't have a problem getting to that. Fund has been on a rip. This is a flight to safety, and it's been very heavily bid. The fund has since May, and weekly's made a breakout of this consolidation here, this range here, this weekly range. It's broken out quite strongly out of that, so there's a lot of safe haven buying, and semiconductors got very wide of the Kijnsen here. That's what I'm ideally looking for to short, when it's so wide of the weekly Kijnsen, and you've got a perfect reversal here on the daily. That's awesome. So semiconductors are another indication of economic weakness as well, so it's no surprise that they've turned down. So the big kickoff was when at the start of May, when really things turned quite ugly. So and oil is just sitting on the 100-day MA here. It's just sitting a little bit of a consolidation here, but with certain events in the Middle East and what have you, it's causing a lot of indecision about direction of oil from here. But the weekly forward cloud, which is 26 candles in the ahead, cloud's 26 candles ahead of price. That weekly candle has turned dark green, which means the forward cloud's turned up. It can only be temporary, like it was back here. This also turned up here to bullish, and then the next candle turned down again. So the idea of these dark green and dark red candles is when you're going through a lot of charts, you don't want to have to pull the chart back this way to see what the forward cloud is like. You don't want to. You can see what the forward cloud's doing just by looking at these colour of these candles here. That tells you straight away that the forward cloud has turned up without having to pull the chart back that way. And as you see here, that was the red candle here, was this when the forward cloud turned down here. So that's how far you've got to pull it back to see the cloud, to see the front of the cloud here. So that was where the Kumo was when this candle formed here. So it's just a conveniencing when you're going through a lot of charts. You can see it a lot quicker, and it doesn't really tell you a great deal, to be honest. But it's just something to look at out of interest. But copper's one of my favourites. Copper turned massive double top here on copper. It just went bang. See, May again. May was the kicker. All these charts have got a common theme. May was when the real turning point seemed to have occurred, and things turned ugly from there. And down to the weekly target here, obviously on the weekly and the daily target here on copper, but that's real good. Bitcoin is above the Bitcoin's above the weekly Kumo now, which is that was sort of the point you could look at back in 2017 when it got above the weekly Kumo. That was pretty much the start of the major bullish run to sort of higher probability anyway, you could say. So while it's above the weekly, it's getting a bit wide of the Kijunsen now for my liking, but could have a bit of a short-term pullback. But it's certainly had a massive rally since May. Is that can't really say that this was a safe haven bid, but then maybe you could say that, I don't know, maybe people are going into Bitcoin and getting out of the stock market, who knows. But it's a bit of a coincidence that this rally really kicked off in May, and everything else was sort of turning quite bearish, and Bitcoin was sort of finding a lot of increased inflows at that time. It could be just a coincidence, but I don't know. Maybe it is being seen by some people as a safe haven. Who knows? But who knows what drives Bitcoin? Really, it's just sentiment, really. So the only way you can really follow Bitcoin is by technical analysis, because you can't look at the fundamentals and say, oh, the fundamentals are this or that, because it's only just really sentiment that drives cryptos, and that shows up. That's why you've got to use charts. People say, charts, 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 I look at the fundamentals. You can't look at the fundamentals of cryptos. That's absurd. And 30-year, 20-year, this is TLT, this is 20-year plus bond ETF, so fixed income is, you can see it's really kicked on in May. Bond, safe haven bonds, bonds are a safe haven, and fixed income, as they call it in the US, and yeah, that's pretty much, that's a beautiful rally there on TLT there as the yields plunged. This obviously went up, so and everything's pointing towards recession pretty much at the moment in late, probably early 2020 at this point it looks like. So according to the sort of official calculations, it should be around about January 2020 that the recession. Sometimes you can't really see the exact point when the recession starts until in hindsight, but that's after the yield curve inverts. That's the typical amount of days after the yield curve inverted. It turns out to be the end of January, so we'll see how accurate that turns out to be this time. But it's going to be interesting to see. But in the US, that is, and the yield curve in Australia is inverted as well, so it's going to be interesting. All right then. Oh, I'm tired. Got to go to bed. Tired, very tired. All right, bye for now.